Hello traders, Gary Wagner here. Approximately 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 7th day of January 2014, and this is the daily report for gold and silver. In light trading, light compared to yesterday, and we will talk about yesterday's low, which turns out to be absolutely authentic. We'll talk about that as we go into the show. But we do have moderately lower pricing today in the precious metal. Gold currently trading off about $5 on the day. 1231.80 is our current print. Our low is 1224.40 and a high of 1246.50. Over to silver. Silver's off about 28 cents, currently trading, as you can see, at 19.86. It has had a low of 19.57 and a high of 20.35. We will get to our gold trade in about 10 or 15 seconds. To our silver trade first. We did not get stopped out of our silver trade. We have true lows in the marketplace. We have our stop below 1950, low of the day 1957 on today's trading. Of course, yesterday did not go into that area. We're looking at our daily chart. Now to gold. When we look at this daily chart, you really don't have a feel or a sense for these lows, how quickly they came and left, and why we actually looked at it as a really potential mistick in the market. It absolutely wasn't. And to really illustrate it, I want to put up a very, very short-term chart. Now, I've gone ahead and put up the cash market chart. This is our current print right now. As you can see, 1231.88. It is currently trading, but each bar represents 3 minutes in time. And the reason that I'm going to for such a short-term chart is to really show you the volatile activity and how quickly it transpired. And here it is right here. Initially, I looked at this as a misprint because of the way it came in and then backed right up into the trading range of the day. When we take a look at this in terms of a 3-minute chart, let's go ahead and blow this up just a little bit. What you see is as follows. Here's the market trading in its normal range, 1250 up here. 3 minutes comes down a little bit, but in a span of 3 minutes, and if I reduce it, you'll see this all happen in the blink of an eye. You can see in a 3-minute period, it opens here, market hits a low here, and then closes back in the range all in 3 minutes. Now, I've taken this down to a 1-minute chart. It's obviously the shortest interval that I can do on my intraday charts. And even on a 1-minute chart, when we take a look at the timestamp right in here, it's this 1-minute period in which the market opens here, makes this low at around 12:15, and then closes right back in the range. This all transpires within a 1-minute candlestick chart, the entire range, the entire trade. Is it in question? Does it seem as though it could possibly have been manipulation in the market? We'll leave that for the experts. My sense is I've never really seen a market come down and then move back into a range in this short of a period of time. And if that's any indication of what is in store for us in 2014, we have got to be acutely aware at every moment of every day. This is the type of activity that honestly I have not seen in the market. I've seen markets dramatically sell off. I've seen markets move parabolically and spike to the upside. However, what I have never seen in a marketplace itself is within this short duration, meaning a 1-minute print on a chart, start within the range of the trading day, form a new dramatic low, but at the same time, because this is the open right here, and this is the close on a red candle, have dramatic enough of a market move in which it moved down here, but in that same minute was able to move back into the range. And to me, that's what I draw into question. Regardless, we did have stops just below 1227. We got in at 42, and we are absolutely stopped out. There's no doubt about it. Whether or not this is a questionable trade in terms of what happened, we'll have to see how that unfolds. But as far as our track record and our trades are concerned, and your trades, we did get stopped out of that. I am sorry about that. These are things that are impossible to know about or control. To say that this has been an interesting first part of 2014 would be an understatement. It seemed as though as the year started, everything that we looked at went counter trend. Stock market was down. It had been up tremendously. Gold was trading up. It had been down tremendously. We do have that kind of moving back into a trend that we had seen last year, and that's higher equity prices, lower gold prices. What we're looking at is a 240-minute chart. We can see that without a question of a doubt, we ran into the resistance roughly between, call it 1245 and 1240. Let's try to put a bar in there and kind of move it across. And there's no doubt, we have this top. This was a top it really couldn't take out. We can see that it's now under pressure. Support in this market, well, we have to look at this series of tops right here. And when we do, lo and behold, this one low print, which is an absolutely valid print at this point, that's where that matches. So I would look for support in this point. We still have resistance at 1245. What does that really do to our long-standing models that we are looking at, and does it give us any clarity? Well, the first thing that we have seen is when we look at a half a day, this of course is a Japanese average chart, and we're looking at spot gold. We see this dynamic uptrend that started really at the end of last year, beginning of this year as it moves up, but we also see our first red candle, which tells us that there's a distinct possibility that what we will witness in the very near future is lower pricing if this continues. And you can see areas in which you get small little dips in the market. We could be witnessing something like that where it only comes down, tests the lows at around 27 or even 12.15. That's that low that we saw the other day. Or we could see it sell dramatically down to even as low as 12.10 before finding support. That, of course, is based upon this top. But the fact that we now have a red candle on the shorter term Japanese average tells me that there is a possibility of lower prices. However, the market is absolutely trying to recoup, and you can see that when we look at a straight candlestick chart as opposed to the Japanese average chart. What we see is a very, very strong pattern, which is simply called a three-river evening star variation. We've talked about this because we see this pattern showing up in gold on multiple occasions. You've had the market in an uptrend, green-bodied. Here, and that's one of the primary reasons I'm going to call it a variation, you get two small-bodied, or actually there are three small-bodied candles that are tucked in between the green candle, which starts the pattern, and the red candle, which closes it out. And let's go ahead and kind of move these so that we have a much better indication. There we go. So we do have three star-like candles. This is that aberration where you have that extreme low in the marketplace. But nonetheless, it is a pattern which we have identified on many occasions, and it has shown us, quite honestly, some very, very strong tops in the market as well as bottoms in the market when we look at the three-river pattern itself, whether it's in an evening or morning formation. Now that's on a 720-minute chart. Now when we move to our daily chart, we don't really see any kind of dip in the market, any red candle showing up. The body size has been getting smaller, and you can really see that as I blow these candles up, but you can see the shortness of that body, and then of course converting it to give us a real sense of the true highs and lows, opens and closes. We get a little bit different scenario. And let's go ahead again and blow this up and put this in a way we can discern it a little bit better. There we go. And even on the dailies, we are getting a very, very similar pattern to the three-river evening star pattern that we saw on the half-a-day candles. You can see that right here. These three candles, once again, you have the market which has been trading higher. First criteria of the three-river evening star, long-bodied green candle meets that criteria. star gapped in the center, absolutely got a star. This is a star with extremely long tails. It's also called a rickshaw man. And this day is not over yet, but you have the red body candle. Now, it's not a large red body like I like to see, like this one in terms of size, and we compare it to the other candles that are on the page, meaning the range that it's had over the last 3 or 4 months. But you can see that even on the daily, it's starting to show us some bearish indications. It's starting to show us some potential for lower pricing. And it's not unless we go into the very, very short-term charts like the 60-minute charts that we even see a dramatic move from the lows that it hit this morning to where it currently is, because that is showing the market moving down, and it shows it in a V. And this is what I mean. This is the 60-minute chart. And just from this perspective, as we look at it on a very, very short-term basis, we can see these highs hit here, runs into resistance at around 45. And this, of course, is after the spike down. But then it comes down and it makes this intraday low. This is our intraday low right at around, I believe, just below 1225, 1224. And you can see that it has been moving up off of these lows. However, this is a very, very short-term study, and I can't put a lot of credence in it. My sense is the way that we've seen this market trade, the wild swing that we saw yesterday, and the fact that we have these patterns emerging, the three-river evening and the daily, as well as the half-a-day chart, is telling me that we might be looking at lower pricing in gold over the very, very near future. So what about silver? Well, silver, of course, has been running in tandem with gold. However, the fact that it's an industrial metal and we have the potential for the equities markets regaining some of their momentum that they had last year, we might see silver and platinum, those being heavily used industrial components, of course, really get a bullish kind of a wind behind its back, so to speak, that might move it higher. Again, 60-minute chart, very, very short term. In the same way we see silver coming off of the lows, in the same way that we saw gold. I'm still looking at support at roughly, call it 1950 to 1958. Our stops are below 1950, so they should be right at around this area. I still see resistance right now, currently, because we have come down in silver at around $20.10. We'll maintain our long silver position. However, as far as gold goes, if we see a follow through in the weakness, we're going to look to see how low that market can go and probably issue a sell signal there. But we'll have to see how that develops. After yesterday's trading activity, I want the dust to settle, so to speak, on the commentary of that particular move, whether or not they're looking at it as some sort of market manipulation or whether or not it was a heavy finger on the trigger, as I have read about. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.